Hello students, today I'm starting with a new topic. This topic is important for the theory paper as well as for the practical exams. This topic is from Unit 5 and the name of the topic is cash flow statement. In this video, I will try to explain why a cash flow statement is prepared. A cash flow statement is a statement which shows the inflows and outflows of cash and cash equivalent from operating, investing and financing activities. So a cash flow statement is a statement and it shows the flow of cash in a business, both inflows of cash and outflows of cash from three activities of a business. These activities are like operating activities, investing activities and financing activities. Now to explain this in more details, let me show you some examples of activities of a business which result in inflow of cash in a business. Now, cash received from sale of goods or services will result in inflow of cash, as cash will come into business when goods or services are sold for cash. Cash received as commission, fees, etc. also will result in inflow of cash. Cash received from debtors or bills receivable will result in inflow of cash. Cash received from sale of fixed assets like cash received from sale of machinery or sale of furniture will result in inflow of cash. Cash received from sale of investment will result in inflow of cash. For example, if the business has invested in shares and sells these shares, then this will result in inflow of cash in the business. Cash received from interest on investments will result in inflow of cash. Cash received as dividends for investment in shares will also result in an inflow of cash. Cash received from issue of shares will result in inflow of cash. Cash received from issue of debentures will also result in an inflow of cash in the business. When long-term loans are raised, this will result in inflow of cash. Now, based on the three activities of a business, we can classify these examples of inflow of cash into inflows from operating activities, inflows from investing activities, and inflows from financing activities of a business. Now, under operating activities, we include cash inflows from cash sales, cash received from debtors, cash received as commission, cash received as fees, cash received as royalty. But for a financing company, the following inflows of cash would be included under operating activities. These are cash received for interest when loans are granted, cash received for dividends when investments are made in securities, cash received from proceeds from sale of securities. This will all include under inflows of cash from operating activities for a financing company. But for other companies, this will include, like for example, interest received and dividend received will be categorized or will be included under cash inflows from investing activities. That is for other firms, but for financing company, these will include under operating activities, cash inflows from operating activities. Now, under investing activities, the inflows of cash can be from sale of fixed assets like sale of machinery, furniture, etc. Then sale of investments will come under inflows from investing activities. Then interest received will be included under inflows of cash from investing activities. Then dividend received will also be included under cash inflows from investing activities. Now for financing, under financing activities, the inflows of cash can be like funds raised by issue of shares or proceeds from issue of shares, fund raised by issue of debentures or proceeds from issue of debentures, then long-term loan raised like or proceeds from long-term loans, then proceeds from bank overdraft or cash credit. All these will be included under cash inflows from financing activities. Now, operating activities. Operating activities are the main revenue generating activities and directly affect the net profit or loss of a business firm. For example, cash sales, cash receipts from fees, commission, and other revenues. So, operating activities are actually the primary or the main activities of a business, and these are the activities for which the enterprise is established. For example, purchase and sale of goods or services, payment of salaries, payment of rent, etc., are the primary activities of a business, and the inflows and outflows of cash from such activities are known as inflows and outflows from operating activities. Next, we have investing activities. These activities include the purchase and sale of non-current assets. For example, purchase or sale of fixed assets like building, machinery, etc. It also includes the purchase and sale of investments. These are the activities which results in the growth of the business or growth in the production. For example, purchase of land and building will result in the growth of the business, and purchase of machinery will result in the growth of the production. These activities also include investments of surplus cash of a business. Now, next we have financing activities. These activities are related with financing of the firm, and these activities result in change in capital and borrowings of the enterprise. For example, when funds are raised by issue of shares, will result in change in the capital of a company, and also funds raised by issue of debentures will result in change of the borrowings of the company. So these are actually the activities which relates with the financing of the firm. Now let me show you some activities which will result in the outflow of cash in a business. For example, cash purchases of goods will result in an outflow of cash in a business. Cash payment to creditors will also result in an outflow of cash in a business. Then cash payment of operating expenses like payment of salary, wages, carriage, etc. will result in an outflow of cash. Cash payment of tax will result in an outflow of cash too. Cash purchase of fixed assets like purchase of machinery, furniture, etc. will also result in an outflow of cash in the business. Then purchase of investment, for example, purchasing securities like shares, debentures, and other securities will result in an outflow of cash. Payment of long-term loans, interest, dividends, etc. will also result in an outflow of cash. There will be an outflow of cash when preference shares or debentures are redeemed. Repayment of long-term loans will result in an outflow of cash. Repayment of bank overdraft or cash credit will also result in an outflow of cash. Now, on the basis of the activities of the business, these examples of outflow of cash can be categorized as operating outflows of cash, investing outflows of cash, and financing outflows of cash. For example, for general business, cash purchase of goods, payment to creditors, cash payment of operating expenses, payment of tax will be included in cash outflows from operating activities. But for a financing company, cash paid for interest, payment for purchases of security will also include under cash outflows from operating activities, which for other business will be included under cash outflows from financing activities. Next, we have purchase of fixed assets for cash. Purchase of investment will be included under cash outflows from investing activities. Then cash outflows from financing activities would include payment of loans, interest, dividends, then buyback of equity shares from open market, redemption of preference shares, repayment of long-term loans, repayment of bank overdraft or cash credit. All these outflows of cash will be included under financing activities for a normal business. Now, I've showed you the various examples of inflows and outflows of cash in a business from the various activities of a business. Now, a cash flow statement is prepared by the business at the end of a financial year in order to show the inflows and outflows of cash from operating activities, the inflows and outflows of cash from investing activities, and the inflows and outflows of cash from financing activities. Now, the statement not only shows the inflows and outflows of cash, but it also shows the inflows and outflows of cash and cash equivalent. So when we say cash equivalent, it includes cash at bank and marketable securities. Now, marketable securities are highly liquid. That means they can be converted into cash. They are short-term investments of a business and they can be converted into cash within a very, very short period of time. So the cash flow statement not only shows the inflows and outflows of cash, but it also shows the inflows and outflows of cash equivalent. So we can say a cash flow statement is a statement which shows the inflows and outflows of cash and cash equivalent from operating, investing, and financing activities of a business. Now in my next video, I will show you the statement and also I will explain you how the statement is prepared.